Hello everyone, welcome once again with your boy, Crow Investor. So today's video is gonna be a little bit longer than the other one because we're gonna go through some things related to a stock that I recently bought, and now I'm in Norway, of course, and it's really bad weather. I'm gonna maybe throw a clip here just to look for you to see a little bit outside. Have you guys watched a movie called The Mist? I think it was in 2000, around 2006, maybe 2007. It was a movie. It's an adaptation of Stephen King's books, The Mist. Well, I'm gonna show you a video here in Norway how it is now. When it comes to the weather, and and we're gonna talk after that. You see how the weather is? Sorry, my daughter is screaming right now. Have you look? You see there, like in front, normally there is mountains there, but you can't see nothing now with all the mist. And in Norway there is no one outside. Typical. If you see some zombies, I mean, it's not abnormal. Boom. Yeah, as you've seen, the weather is bad, but it is what it is. So today's video I'm gonna talk about what I did, but I know that some of you will be maybe pissed at what the decisions I made, but it is what it is. Sometimes you discuss it with yourself, all the steps you want to take, especially in this market. I told you last time that this market is overvalued. I feel like everything is up, and since I don't have any I don't have any money like left to the side in case something happened, the crash happens, I would be able to buy or so. I don't, and I know that speculative stocks will be hit the most if a crash happens. So now I don't know. I was aggressive at first when I started investing like 8 or 9 months ago, but after some time I'm starting to get a little bit conservative in a way. So I don't like just buy a stock. Yeah. So what I did last time, as I told you, I sold a lot of portion of my Virgin Galactic shares, and I bought Apple stock because Apple stock, I feel it's a bit safer than the others ones when it comes to earnings, revenue, and stuff like that. And I had 100 shares left on Virgin Galactic, and I was like discuss it with myself, looking at those 100 shares. I'm like, should I sell or not? I have 175%. I had 175% gains on the stock. There is no earnings. There is nothing. The stock is too volatile, and if something goes wrong with the next test flight, they will probably crash a lot. So I'm looking into that, and of course in relation to the stock market, how everything is overvalued, I was thinking, okay, what should I do? Should I sell or not? But then something happened. Palantir stock crashed. And thing is, I had always my eyes on Palantir before it went EPO. But when it went public, I didn't have money to buy. I'm a normal guy, probably like you guys, so I know. I just wait for my check to come every month. So I didn't have money to buy because I was building my position in other stock because I just started. I had maybe $10,000 back then in late May or beginning of June. So I didn't buy it. At the end of the day, I didn't buy it. So when I saw the Palantir crashed, I was like, holy shit, it crashed like 34-35%. I like the stock. I looked at their earnings were phenomenal. I wasn't waiting, I wasn't like expecting for the stock to come down as much as it did. So I was like, okay, I'm gonna sell those 100 remaining shares of Virgin Galactic stock, and I'm gonna buy Palantir stocks instead, and that's what I did. Maybe some people will get pissed, but yeah. So I bought the Palantir stock. The earnings were good. I'm gonna go through the earnings. I'm gonna go through the revenues shortly, and I'm gonna show you why I'm bullish on the stock. Why it went down 34%? Because some people, there is you know, there's some people who were kind of disappointed with the earnings. Why? It's not because they were bad, they were really good, but because they kind of forecasted in the future, like next 3, 4 to 5 years, that they're gonna have a revenue growth of 30%, and that made people, like, you know, go out of the stock. The thing is about now, people, I told you last time that people are too much focused on short-term gains and on the next 10x stocks, because they see that the drama that is going on with GME, the AMC, the stocks that went from 0.85 cents to $15 and stuff like that. And when they see that, they think like, oh shit, everything is going up, so I'm gonna just find my 10x stock or 100x stock. So it's like, okay, so that's probably a reason why, maybe, for that drop. And of course they issued more shares now, so it's not the same as before, so they just like released more shares. So I'm gonna look at the earnings now, and then so it gives you an idea on what is this thing. I'm getting blind. Yeah. So we're gonna look at it now. Good. So now let's see. I went through this one before, so I'm just like trying to give you a kind of, you know, broad idea about the thing. So in Q4 2020, we closed the number of large deals across our commercial and government segments. This is another thing people like think about. They think that Palantir, they only have government contracts and they have too much focused on one specific, like on the government in order to have gains, and maybe because of that they think like it's not as safe, because if the government cuts their work with sorry for that, my daughter is, you know, screaming, she's talking or blabbling or whatever it's in the kitchen with my wife. So yeah, so maybe because people, they think that they are too much focused on government contract, government revenues, that they it's not as safe as the having a broad customer base. So here in Q4 we closed the number of large deals across our commercial and government segments. Look at this one. Deals signed in Q4, each worth 5 million or more. So they signed in Q4 of 2020 deals each worth 5 million or more, 12 of which were each worth 10 million or more. So there is 21 deals signed in Q4, each worth 5 million, but 12 of those 21 is worth more than 10 million. Let's go now to this one. In 2020, we generated 47% annual revenue growth. You know, bear in mind this is a 50 billion market company, and generating 47% annual revenue growth. It's tremendous. I don't know what to say. I mean, like, I don't know, because when I looked at the earnings, I was expecting the stock to go up, not go down. So when they went down, I was like, no freaking way, I'm gonna buy it. I didn't have money to buy it, so I was obliged to sell Virgin Galactic, because of course Virgin Galactic they don't have anything yet, and I could always get in Virgin Galactic in you know, sometime when it allows it, but I found the opportunity, so I just like seized the opportunity. So revenue from our top 20 customers is increasing. Look, so the revenue from our top 20 customers is increasing from 495 million in 2019 to 663 million in 2020. Now we go to the right side. Customer concentration, look at this one. Customer concentration of our top 20 customers as a percentage of total revenue is decreasing. What does it mean? It means like people, I told you in the last one here that people are maybe focusing on, they think that it's too focused on government segments, right? But here they say that the customer concentration of our top 20 customers is decreasing. It means now they are getting a broad range of customers, not only the governments but other customers as well. So it decreased from 67% to 61%. This is huge, guys. I don't know like why people like, I don't know, man. But you know what? When people are greedy, that's the time to sell. When people are afraid, that's the time to buy. If you do this, you will gain money in due time. So here we continue to grow our pipeline. Customers in the acquire phase in 2020 generated 77 million 2020 revenue. New customers acquired in 2020 generated 42 million in revenue, a new record for the category. You see, so average revenue per customer went from 5.6 million to 2020 7.9 million. So the thing is about this one is that even though their concentration is decreasing, but the revenue from each customer is growing. So they are getting more range of customers, but still be able to increase their revenues per customer 41%. I mean, like, hello, it's pretty clear. If you haven't bought this one, and if you consider buy it, it's time to get in now. Don't wait for it to dip. If you have money, put a little bit now. Of course, this is not financial advice. Always do your due diligence and blah blah blah. But still, so we continue to grow our customer relationships at scale. Number of customers generating 1 million, 5 million, and 10 million in revenue. So they have entered. So from like this is number of people, customers, and this is like millions per customer. So they have like increased from 2019 to 2020. 32%, more than 100 customers, and this one had 1 million or less. Again, 54% for the green one, 5 million, and the last one more than 25 customers, plus 50%. Let me see if there is something else we can talk about. Look here, in 2020 we generated 1.093 billion in revenue, up 47% from 2019. That's what we talked about earlier, that they went up 47%. The Q4 revenue, when you look at Q4 2019, 229 million. Q4 2020, 322 million. It's up 40%. Full year revenue from 743 in 2019 to 1 billion, almost 1.1 billion revenue. I don't know why like people sell, to be honest. I don't know, people get, there's always like some kind of overreaction to the people get emotional fast, and I see that even like when like chatting maybe in Reddit or something, I see people like getting up, the stock is going down, should I sell? Like, oh, come on, man. If you get into a stock and the moment like something goes bad, you leave the stock, means that you didn't do enough due diligence to keep you like positive about stock. People like they get scared fast, and if you have seen the EHang stock, I went down 60% because the short sellers, like, they released an article about the EHang company, and it went down 60%. And you know what people did there? People who know what they do, they bought the dip. It went up instantly, like, I don't know, 20% or something, 15 or 20%, maybe more, and they sold. And it's still good. Look here, in 2020 average revenue per customer increased by 41%. So the average revenue per customer increased by 41%. And the average revenue from our top 20 customers increased by 34%. Revenue from our top 20 customers increased by 34%. Just think about this one. They have government contracts, right? But do you think governments like give a shit about how much money they spend on things that are vital to the country, like terrorist attacks and stuff? They don't. If they have a problem, come here, Palantir, do this. I don't care how much it costs. Just do it. That's how they do. They don't care, because when they print money now, I mean, like, hello. So revenue from our top 20 customers increased by 34%. It went from 5.6 million to 7.9 million in 2020, 41%. Average revenue from our top 20 customers went from 24.8 million in 2019 to 33.2 million in 2020, 34%. So this is why I'm telling you that that's why I sold Virgin Galactic and bought Palantir, because I saw I already had 175% give or take in Virgin Galactic as profit. So I thought, Palantir went up a lot. It normally trades in the $39 range, and it went down all the way to 25. Of course I'm gonna buy. So I just sold that 100 shares, and what I did is that I bought Palantir stock. So instead of having 100 shares of Virgin Galactic, I have now 200 shares of Palantir stock. We can go through my portfolio, maybe, just an update for you guys to check, because I show everything, and you know that. I mean, I don't care about people like who just like make things like this is public and this is private. I only have one, and that's what I'm gonna show you. I don't know where it is now. Here, yeah. So now I have, I forgot to do this. So now I have, look here, this is my portfolio. Total gain now is 46,400 because I sold some, so I realized my profits. I'm up 58%, 0.42, $125,900. This is my portfolio. Palantir, now it's 29. You see, I bought it like $25. It won 15% the next day. I mean, and post, it was up even more. Post trading hours. Bauer Nano, of course. Neo. Okay, let's go to the holdings so it may be easier. Palantir have 199 shares. Cost price of 25.10. Now it's 29. And it's gonna go up. And I'm gonna keep on adding more if I have, when I get money, of course. Apple, I have 128 shares. Why? Because I had another almost $1,700, and I added the Apple. So $134, cost price. Being by now same 2000, New same 110, and Tesla same 90. And total gain and everything like that, it's here. So market value of Palantir 5,771. I'm up 15%, which is $776. Apple, I'm down currently, but I have a market value of 16,600, but it's fine. I mean, I would keep on adding on Apple if it goes down. Buying another 27,000, up 78%. Neo up 177%, $6,000, and Tesla up 76%, $70,000 market value. Yeah. So this is what I did last week, and I wanted to share it with you, so you know what I did. Of course, if you still have Virgin Galactic, it is fine to keep it, and you have money to the side. You could, if I had money to the side or saved, I would have bought Palantir without me selling Virgin Galactic, because I only had 100 shares, so I would just keep it maybe. But the fact that I saw the opportunity, sometimes when you see the opportunity, you should just take it. You shouldn't just wait, because when sometimes people get a kind of emotional attachment to the stocks, like no, I wouldn't sell now. We shouldn't be stubborn kind of. If you see opportunity elsewhere, because let's compare Palantir with Virgin Galactic. Virgin Galactic don't have nothing as revenue, nothing. There is potential, but potentially where it is, I don't know. And Palantir, they have revenue, they have contract, they have everything. I mean, what would you choose? Like a logical guy would choose Palantir over Virgin Galactic, because Virgin Galactic seems now like a speculative stock more than fundamental focused on stock. So this is it for today. I hope you like it. If you did, please consider subscribing and check my other videos about the stock market and everything I did since I started. So thank you for today, and see you next time. So close out.